All right, let's play a game. Imagine you give me $100 and I tell you, don't worry, I'll keep it safe. But the moment you walk away, I lend your $100 to 5 different people at the same time, charge them interest, and somehow turn your $100 into 500. Sounds like a scam, right? Well, that's literally how banks work. Banks aren't just holding your money. The moment you deposit it, they start flipping it, stretching it, multiplying it, and making themselves rich, while paying you back with pennies. And if you ever wonder why banks seem to get richer no matter what, it's because they don't just use their money, they use yours. But here's the wildest part. They actually need you more than you need them. Because without people like you trusting the system, the entire thing collapses overnight, which has already happened before. Most businesses make money by selling a product or service, but banks, they sell money itself. It all starts with loans. Let's say you walk into a bank and deposit $1,000 into your savings account. The bank smiles, shakes your hand, and promises to keep it safe. Maybe they even throw in a 0.01% interest rate just to make you feel like you're winning. But the moment you leave, that money is already gone. The bank lends it out to someone buying a house, a car, or a business owner taking out a loan. And they charge way more interest than what they're paying you. You get 0.01% interest on your savings. They charge 5 to 10% on a loan, and they keep the difference. Sounds unfair? It gets worse. Because banks don't just lend out your $1,000 once. Thanks to fractional reserve banking, they can legally lend out the same money over and over again. Here's how it works. You deposit $1,000 into your bank. The bank keeps only a small percentage, say 10%, and loans out the rest. That means $900 gets loaned out to someone else. That person spends the $900 at a store. The store deposits that same $900 back into a bank. The bank keeps 10% of it and lends out the rest again. This cycle repeats until your original $1,000 magically turns into $10,000. That's right. Banks can multiply money out of thin air. But what happens if everyone comes to withdraw their money at the same time? That's called a bank run. And when it happens, banks get exposed for the giant financial illusionists they really are. Now, this isn't just some theoretical scenario. It just happened in 2023 with Silicon Valley Bank, SVB, the biggest U.S. bank collapse since 2008. Here's what went down. SVB had tons of money deposited from tech startups and businesses. But instead of keeping that money safe, they invested it in long-term bonds. Then, interest rates skyrocketed, making those investments worth way less. Word got out that SVB might be in trouble, and panic spread fast. Within 48 hours, businesses started yanking their money out. Since banks never have all their depositors' money on hand, SVB collapsed instantly. Billions vanished overnight. People who thought their money was safe in the bank were suddenly watching their accounts go to zero. And here's the worst part. When banks make stupid mistakes, they don't suffer. You do. Because guess who swooped in to bail them out? The government. With whose money? Yours. But banks don't just make money off loans. They also squeeze every penny out of you with a never-ending list of fees. Here are some of the most ridiculous ones. Overdraft fees. If you accidentally spend $1 over your balance, the bank might charge you $35. ATM fees. If you use another bank's ATM, you get hit with a $3 to $5 penalty for taking out your own money. Maintenance fees. Some banks charge you just for having an account. Wire transfer fees. Moving money from one bank to another? That'll be $25, please. Early withdrawal fees. Try to take out your own savings too soon, and the bank will fine you for it. And these fees add up. Banks made $33 billion in overdraft fees alone last year. They are nickel and diming people to death while turning around and making record profits. Now, you might be thinking, okay, so banks are basically giant money-hungry monsters. How do I fight back? Here's how. Stop parking money in big banks. Big banks give you garbage interest rates. Instead, Put your money in high-yield savings accounts or credit unions, which actually pay better rates. Avoid unnecessary fees. Read the fine print. Some banks waive maintenance fees if you set up direct deposit. And never use out-of-network ATMs. Invest instead of saving. Keeping money in a savings account earns next to nothing. If you want your money to actually grow, look into investments like index funds. Use the system against itself. If banks can make money off your deposits, why not make money off them? Look into bank bonuses, credit card rewards, and cashback deals. The bottom line, banks need you. You don't need them. They survive because people trust them. But once you see the game for what it is, you can flip the script and start playing to win. So the next time you deposit money into a bank, just remember, they're not just holding it. They're multiplying it, flipping it, and making a fortune off your hard-earned cash. And now that you know their tricks, what are you going to do about it?